Good morning, back on my feet team. This is Brianna Adams. I am a community development officer with Independent Financial, and today we're going to go into a little bit more detail about financial products and services. Just walk you through what some features and you might want to take into consideration, and also just important questions to ask before opening up an account with a financial institution. First, before we kick off, I just want everyone to spend a little bit of time thinking about your experiences with different financial service providers, and think through if those experiences are positive or negative and why. Perhaps you used a product and incurred a fee that you weren't aware of, or you realized that the customer experience wasn't quite what you expected. Maybe you couldn't get a hold of someone on the other line when you needed customer support, or maybe you've had a really good experience with your financial service provider and really happy with the features in the customer service that you currently have. Just take a minute to reflect on that. I think it's a great place to start before leaping into the rest of the webinar. And I want to take a moment to reflect and for everyone to just make a list. You don't have to draw it down on paper, but just think through in your head a list of financial services and products that you might be currently using or have used in the past. And while you're at it, just go ahead and brainstorm about other services and products that you might not currently be using, but perhaps you'll use in the future. After you've done that, of the ones that you listed, which ones are you currently using? Which features do you like? And which features do you dislike? Kind of give a mental review of the products and services you're currently using. Think of it like a shoe review. Sometimes you have to make some concessions. Maybe you're looking for a pair of shoes and it's not quite the style that you want, but the fit is really good and the comfort level is there. Or some people choose to make comfort sacrifices because their preference is to have a shoe that looks, they went to the store and they're looking for a particular style and they nailed the style. The comfort quite isn't there, but they're willing to suffer through it. And that's kind of a lot like financial services and products. It's a pretty competitive market. And so each product might have different features and also different fees and different costs associated with using it. Before we get into the details of opening up accounts and kind of questions you should ask and things to take into consideration, I wanted to provide a brief overview of some products that you might already be using. The first is prepaid cards. These are usually used as a secure place to keep money. You can make purchases without carrying cash or going into debt because it typically doesn't let you draw. Typically doesn't use more than what's loaded onto the card. It's also an easy way to pay and manage bills. And you can also typically pay bills online with those cards. And you can get your paycheck directly deposited onto them. Some of them even have savings wallet features, allow you to save funds for specific purposes. Typically how they work is you can access money that you've put onto the card in advance that's stored there, and they're accepted pretty widely at most stores. Some of them will let you take money out of an ATM or also reload money on your card, but you might be charged a monthly maintenance fee or usage fee for that. So that's kind of a fee that you would need to take into consideration. As I said earlier, some offer a separate savings wallet feature that allows you to almost kind of save for your goals in the same way that you might use a savings account at a bank or credit union. The funds might be insured in case the the bank that offers the card fails, one important thing is that if you have a chance to register your card, that's the best way to ensure that you're protected. If there's an error, kind of a fraudulent charge on there. Typically, you can get these cards from banks or credit unions, check cashing stores, or sometimes big box retail stores or grocery stores as well, and some online providers offer them. Another option that you might be familiar with are payroll cards. Those are typically how those work is your employer will load your salary or wages onto a prearranged prepaid card where you can access the funds because they're directly deposited onto it. And you would use the card like a prepaid card, like we said earlier, a debit card. It is accepted at most merchants, but it might have service fees or inactivity fees. So you really have to make sure that you ask all those questions up front. The cards do have full consumer protections in case of electronic error theft. Another important thing to note is that your employer has to provide you at least one other way to receive your salary or wages in addition to the payroll card. These are only offered by some employers and companies, so it may not be an option at your place of employment. Another option or financial product that's available is a checking account. Those are offered through banks and credit unions, and they have all the features that you're probably familiar with. You can deposit and withdraw money from your account when you want. Some products do earn interest, and it allows you to build up to manage your funds. Oftentimes checking accounts will come with additional services that the bank or credit union will provide for you, such as online bill pay options, online banking. Typically, if you're a customer of a bank or credit union, you can cash your checks for free there. Oftentimes, they'll also give you a complimentary debit card that you can use to withdraw funds or pay for goods and services. Another feature that some have, some accounts will also give you checks. Sometimes you have to purchase them. Sometimes they're complimentary. If you're looking at a low risk checking account, they might not provide checks, as mostly just to avoid overdraft fees or the possibility of doing that. Some of them, I'm not sure if I mentioned this already, but some of them will also offer you free access to in-network ATMs. So if they're ATMs that are run by the bank or credit union where you have an account, you can typically withdraw money from those or check your balance for free. And some might even reimburse you for the fees that you would incur using an out-of-network ATM. And we'll get into more of these features later. That's something to be aware of. Savings account, oftentimes these are linked to your checking account. You can see both balances when you log into online banking. It provides a good way to earn interest, to build savings. You can have your paycheck directly deposited into that. Or another great savings hack is to have the majority of your paycheck deposited into your checking account and then set a certain percentage to direct deposit into your savings account. And that would be done through your employer. Typically, some accounts might only allow you to withdraw money from your savings account a set number of times per month. They're not intended for frequent transactions. Deposits are insured in case your bank fails, and you have federal rights if your money's lost or stolen electronically through error or theft. Credit card is probably another financial product that most of you are familiar with. Typically, it's a good way to get small loans quickly and to build up a credit history. You can borrow up to an approved credit limit amount and have to pay at least the monthly minimum until the balance is repaid. If you don't pay the minimum, then you can incur interest, and if you're not paying your balance in full, you'll also build up interest. And then oftentimes, I'd say almost in every case, the credit card company will charge you fees if your payment is late, and that will also actually damage your credit score rather than help you build it up. Some of them, especially if they offer additional perks or if they're a rewards card, you might see that they charge an annual fee. That's an instance where you really have to weigh out the pros and cons of whether it's worth paying, you know, $50, $60, $70 a year to get all those extra perks, and if it's really a win or if it's actually kind of a hidden, you know, it's not worth the money. Typically you can get these through credit card companies, of course, but then also you'll find them on offers at gas station chains and large retail stores as well. A great option if you are trying to build credit or repair credit and might not qualify for a typical credit card is a secured credit card. These are available through banks and credit unions, as well as some credit card companies. And these are mostly just used to repair and build credit history. How they work is that you put down a deposit with either the bank, the credit union, or the credit card company, and you can borrow money up to the amount of that deposit. So if you put down a $500 deposit that they're holding, then you can charge up to $500 on the card. You're charged interest if you don't pay down the balance in full each month, and you're also charged late fees if you miss a payment. Many do charge an annual fee, and they're accepted at merchants the same way as credit cards would be. The great thing about this is it doesn't let you, typically that deposit or your credit limit is pretty low because it's tied to that deposit. So you can't get into too much trouble by maxing it out. And it's kind of a pretty safe way to repair credit history. Some financial services that you might be familiar with, I mentioned a lot of them, we were discussing checking accounts, but online banking, I think that's pretty much assumed that any type of financial product that you have, at least with a bank or credit union, will have access to online banking features. They might even have an app that makes that easier. You can also set alerts for most accounts to see when you might have a low balance, etc. Some also offer peer-to-peer transfer service. So if you're familiar with Venmo or Zelle, that just allows you to pay money directly to others. So you can electronically transfer funds to another person and typically send and receive them just by using your mobile device or a computer. Some banks or credit unions might charge you a fee to use this, but I think the trend is that more and more companies are offering this as a free complimentary service when you have a checking account with that bank or financial institution. Another service we mentioned earlier is check cashing. So you can just receiving, presenting your check to a teller and receiving cash for it without depositing it into an account. Typically, you are charged a fee for that if you're not a customer, but you wouldn't have to have a checking account. The plus about having a checking account with one of the financial institutions is that they won't charge you to cash a check as a customer typically. And I think the fees are usually around $5 for non-customers. So that can really save you money over the long term by just going ahead and opening up an account. Another common service that's offered is bill payment service, which allows you to pay your bills online, typically through the bank's website or sometimes in person. Like if you're familiar with the bill payment services offered at grocery stores or other large retail stores, it just allows you to do it online rather than mailing your check directly to the company. And then money or wire transfer services, those services just provide you a way to send money to another person or another company. I would say most often these services aren't complementary with basic accounts and you'll be charged a fee. So typically there's another way to do that for cheaper. Okay, I wanted everyone to take a minute to think about what kinds of questions you should ask before opening an account at a bank or credit union. So you can think about things you could be thinking about right now are what features does the account have? What days is the branch open? Is there like a dedicated customer service call line? Are you going to get stuck in a phone tree, or is it going to be pretty easy to reach someone? As more services, as kind of more products and services are available online, sometimes you can, open a checking account with, let's say, Ally, and you won't have the option to walk into a branch. Typically, those accounts do offer really good interest rates, but sometimes you are, it's a kind of like a pro-con. You're getting a better interest rate sometimes, but you also don't have the convenience of walking into a branch and speaking with someone in person, and the customer service might be a little trickier to navigate. Okay, so when it comes to comparing financial service providers and products, the key thing to do is to shop around. The financial marketplace is very competitive. So typically, once you've decided, from the financial products we discussed previously, what you're looking for and what services are going to be most helpful to you, you will have to choose between different companies that provide different variations of the same product. Every bank and credit union is going to have a checking account, they're going to have a savings account, but there'll be different fee structures, there'll be different services offered. One financial institution might have a branch in your neighborhood, one might have one a little bit further out. So it's important to get answers to common questions like fees, like I mentioned, the complementary services they provide, security, so how they're protecting your money, convenience, like I said, branch locations, the technology, like their online banking platform, if it's clunky or really intuitive, and then access. And we'll go into some other questions later on. If you're thinking about going the route of a checking account, there are definitely some good options depending on your particular needs and financial situation. One product that several financial institutions offer is a low risk account, which might be a good fit once you kind of consider the following questions and answer these and think through them. Have you overdrawn an account in the past? If the answer is yes, you might be a good fit for a low risk account. Have you had an account closed in the past? Is your income sometimes inconsistent and unpredictable? Can you maintain a sufficient balance? So some accounts will have minimum balance requirements. So there's an opening balance requirement, which is how much money you have to open the account with, which will typically be anywhere from $10 to $100. And then there's another requirement, which is a minimum balance, which means you have to keep a certain amount of money in the account at all times. And if not, they might close the account or you might get charged a fee. So that's something to consider. Also, do you want to avoid unplanned overdrafts and fees? And we'll get into what an overdraft is. But if the answer to any of these questions is yes, you might want to take a deep dive into some low risk checking accounts, because those will really help you avoid overdrafts and fees, and also just, make managing your money a little bit easier. Typically, these low risk checking accounts will have a few features across the board. They will automatically opt you out of overdraft protection. They will also, sometimes they won't issue you checks, just because that's another way that you can overdraft your account. They might have lower fees or lower monthly maintenance fees. And so I would say those are the primary features. The main feature is that you won't be able to overdraft. And really that's to protect you from accumulating just a ton in overdraft fees that can really add up. And questions to ask with these, with kind of opening up a low risk checking account. How is this account going to help me overdrawing my account? Can you transfer funds? So sometimes you can link your checking account to a savings account, and that will allow you to avoid or reduce the cost of an overdraft. So it's called overdraft protection. And what happens is if you overdraw from your checking account, when the bank sees that you don't have enough money in your checking account, it will pull from your savings account so that you're not charged an overdraft fee. But the main feature of these low risk checking accounts is to let you only spend the money that you have in the account, and prevent unexpected overdrafts and fees and reduce your risk of losing account privileges because of unpaid overdrafts, which is typically what happens like if you've had an account closed. Some banks don't offer these types of accounts or don't market them, so it's really important to ask whether your local bank or credit union offers it. Some more questions to ask. You definitely want to ask about the fee structure. When you go into the branch, ask for the fee disclosure form. All financial institutions are required to provide this for you. It's basically just a list of all of the fees that you can expect to incur when using the account. It's really important to read that up front to avoid surprises and go through it with whoever you're working with at the bank. Some things you might want to pay particular attention to are monthly account maintenance fees, which I mentioned before. Those typically are about $5. There are a few banks where they don't charge a monthly account maintenance fee at all. You also want to know how much it might cost if you go below that minimum balance, which is what we were talking about briefly before. And then typically you won't be charged for making purchases, but it's good to clear that up. Are you charged for account inactivity? Are you charged for making a deposit? What's the overdraft charge, if it even lets you do that? And then if the bank has to return a check or bill payment that you've issued, if you have insufficient funds in your account, you also want to make sure that if there's, checking to see if there's a fee for that. Just a tip though, the monthly maintenance fees, the account maintenance fees, that $5 a month, sometimes it might be cheaper in the long run to pay that every month than piling up overdraft fees, which typically start at $30. But after asking all those questions about fees, it is important to realize that a lot of times there are ways to waive the monthly fee. Typically what that looks like is if you make a direct deposit into your account, or if you have so many debit card transactions that clear a month, or maybe both of those. Sometimes a company will waive the monthly maintenance fee. Another good thing to ask about is ATM fees and how to reduce them, and which ATMs you can use without a fee. Finally, you'll want, before kind of considering a low risk checking account, you want to think about whether or not you need to pay anyone via check. If that account doesn't issue checks, that might be a problem. And then also, if you need to pay your bills online, then you want to make sure that they have online bill pay. And finally, you want to ask when the funds that you deposit will become available. Oftentimes, if you deposit a check, or if someone makes sends you a payment electronically, it won't become immediately available the same business day. Okay. And then if kind of after asking all those questions and hearing about a low risk checking account, if you think it is a good fit for you, there's a list of available low risk checking accounts on Bank On. It's a coalition that's kind of developed their own national account standards for these low risk checking accounts. So you can see a list of banks that do offer one of those, and it might kind of save you some trouble of just asking around and help you narrow down your decision-making process. There's also a local website for Denver's chapter of Bank On that also has a ton of resources that might be helpful. When you're opening an account, they're definitely going to require some documentation. It's kind of nice to know that up front so you don't make an extra trip to the bank or credit union. Beforehand, you'll want to gather the following documents: a picture ID, either issued by the state or the US, like a passport, or a foreign government. If you have an ID from a foreign government, you're going to want to call ahead and see which types of foreign ID the bank or credit union accepts. And then in addition to that picture ID, you'll need a second form of ID, which is typically a social security card, a birth certificate, or a bill that kind of verifies your name and address. And then finally, you will need to provide your social security number or ITIN for any account that bears interest. So typically a savings account, although I've definitely seen checking accounts that also bear interest as well. If you don't have a social security number or an ITIN, you might be able to open a non-interest account, but you won't be able to open one that pays interest. The reason that you have to provide a social security number or individual taxpayer identification number, an ITIN, is because savings accounts typically pay interest, which is considered income. And if you're earning income, you might have to pay taxes on it. So they need a way to tie that to your identification number. And then you also need to bring the required amount of money to open the account. So we were talking about minimum opening balance, and that does, it can range, that can vary significantly. But I think it would typically be $25 to $100. And you also really want to make sure that you find out the minimum balance requirement as well. We had talked about that, but find out the opening balance, bring that to the branch when you're opening up an account, and then also make sure you ask about how much money you have to keep in the account at all times, because those aren't necessarily the same thing. And get all the facts. So while you're opening up that account at the branch, that's the best time to get all your questions answered. Make sure you understand how the account works. If you need any help understanding the services or navigating online banking, it's best to just get all that taken care of at that moment. And like I said, make sure you walk through the fee disclosure form with the representative that's taking care of you, so that you're not surprised by anything, because all of it is disclosed. Okay, so you might experience some barriers to opening an account if you have negative information in your file from a previous checking or savings account. This can happen if you have an unpaid negative balance. So if you overdrew your account and incurred overdraft fees and you haven't repaid them, and then the account was closed, that can show up on a report and reflect negatively and could prevent you from opening an account. Also, if you were suspected of fraud related to a checking or savings account, that can be a reason you're denied. And the third possibility is that you had a joint account with someone else and they used the account in a way that was suspected of fraud, or if they overdrew it significantly. One easy way, and also if you don't have the proper identification that we talked about previously, the identification issue can can be resolved in a few ways. If you don't have a driver's license, you'll want to consider applying for a state-issued identification card. And then if you are looking to provide a foreign ID, most, or I'm not going to say most, but some banks and credit unions will accept foreign passports and consular IDs. The Matricula Consular card is an official Mexican government ID that is available through its consulates in the United States, and you might be able to get a similar ID from other countries, and I know several banks will accept that. If you're dealing with negative information that's showing up on a checking account report, that information is collected by 3 main reporting companies: Check Systems, Early Warning, and Telecheck. And under federal law, all of these companies must, among other things, take steps to assure that the information they're providing to banks is as accurate as possible. And kind of similar to your credit report, they can't include most negative information that's more than 7 years old. So this, in most cases, this won't stick around forever. It'll eventually roll off. But that is where banks and credit unions are getting that information. Some of them, if you know that you've significantly overdrawn an account in the past and owe money to a financial institution, some banks and credit unions will require you to pay those old charges and fees before they allow you to open a new account, even if they're from another institution. And as I said earlier, many banks and credit unions will offer those low-risk checking accounts, as well as prepaid cards that are designed to reduce risks in the future that are associated with overdrafting your account. You can, if you do get denied, if you go in to open a checking account and you get denied, you can order a copy of the report that they're looking at from one of those companies and make sure there aren't any mistakes on it. And then if there are, you can send a dispute letter, which I can send Lindsay additional information about that process. Okay. And then finally, overdraft. I've been mentioning this a lot, and I probably should have put this earlier on in the presentation, but this is kind of a key thing to be aware of because it can really get you in trouble quickly. An overdraft occurs when you don't have enough money in your account to cover a transaction and the bank pays for your transaction anyway. So if you have $5 left in your account, you go out to get a burger and fries, it's $10, you use your debit card to pay for it, the bank goes ahead and covers that charge and pays the $10, even though you only have $5 in your account. You just overdrew your account by $5. So typically when that happens, there are associated fees. And if you overdraw your account, you not only have to pay back the amount that you overdrew it by, so in this case, the extra $5 that you didn't have, but you also have to pay back the fees. And in this example, I mentioned overdrawing using a debit card, but you can actually overdraw it by way of check, ATM transactions, automatic bill payments, or electronic or in-person withdrawals. Down the road, if you aren't able to pay the overdraft, there are some negative repercussions, like I mentioned earlier. They can close your account, and that can also get reported to one of those checking account reporting companies. And that information could remain on your report for up to 7 years, which will prevent you from opening a new bank account for several years after that event. Some banks and credit unions are willing to kind of consider look beyond that. Typically, fraud is kind of this big sticking point for all institutions. But some, if it's a matter of overdraft fees and kind of an account that was closed, they might work with you and still open a checking account for you anyway. It just depends on the financial institution's policies. So there are two different types of overdraft services. One is overdraft protection, and I briefly mentioned that earlier, but that's when you and your bank or credit union arrange for any overdrafts to be paid from money in your linked savings account. You typically will pay a fee when the money available in your savings account is used to pay that overdraft in your checking account. And the savings account often needs to be at the same bank or credit union. This is a decent option, but not great. So you might want to look into opting out of the opt-in service. An opt-in service is when a bank or credit union allows you to spend more money than you have in your checking account, but at a cost for each transaction, which is that overdraft fee. If you opt in, you're telling the bank that you want them to allow you to withdraw more money from an ATM or spend more on your debit card than what you have in your account. And when you do that, it results in overdraft fees for each of those transactions, which can happen several times in one day. Let's say you're out for the day and you don't have account alerts set up, and you buy that burger when you have $5 left in your account, and you go -5 because it was $10, and then you go out later and see a movie with friends. You overdraft it again, and you get charged a fee for each transaction. The fees are typically $30 to $35. So suddenly a $10 burger becomes, you know, a $35 burger. And then it can keep on kind of rolling, and it can become pretty hard to get out from under that. In addition, some financial institutions will charge you a separate fee each day that your account stays overdrawn. So if you overdraw it and then you're charged an overdraft fee for $30, let's say the next day they charge you $5 because you haven't gotten your account back into the positive. And for every day after that, when it's overdrawn, you're charged an additional fee. But as you can see, this can really add up quickly, which is a great reason that if you think you might not be able to maintain kind of a steady balance in your account, or if your income is a little bit more unpredictable, it's a great option to completely opt out of that service. Which means that rather than letting you overdraft, they will just your debit card will get declined, and you won't be charged a fee. So you won't be able to withdraw cash or make a purchase that costs more than what you have in your account. And this opt-in service applies only to one-time debit card and ATM transactions. So it doesn't protect you from incurring overdraft fees caused by checks or online bill payment. But the important thing to know is when you open an account, unless it's one of those low risk checking accounts, you are almost always opted in for this service. So a really important thing to think about with yourself is whether you want to be able to overdraw your account. And if not, you really need to be clear with the person setting up your account that you would like to opt out of this. Because it's mostly automatic, so you have to tell them you don't want it. And the only con, really the only con to opting out is that if you are ever in a tight spot and you're going home from work and you need gas and you're on empty and your account has, there's not enough money in your account to pay for a tank of gas, you're kind of stranded because they'll decline your card if you're opted out of the service. But beyond that, it saves you from incurring a lot of those fees that can add up. Okay. And then finally, just a few notes about account management and just some best practices. Pay attention to the monthly service fees. Make sure that you're aware of whether or not you need to meet a set of requirements for those fees to be waived. So how many direct deposits do you need to have put into your account each month? How many debit card transactions do you need to have run through, etc. And then keep track of your balance and outstanding payments. A great way to do this is just to download whatever app they have for your phone and check in occasionally. Another good practice is to check your balance before withdrawing cash in an ATM or writing a check or making a payment. A nice service is signing up for transaction alerts and low balance warnings via email or text so that you are aware that your account has a low balance before you write a check or before you accidentally overdraft if you haven't opted out of that. And another key thing is to not assume that the money you deposit is available immediately. It's a good question when you're opening an account to ask when money is typically available for use, and ask if there's a hold on the money you deposit and when it will be lifted. Typically, if you deposit a check for $200 or less in person to a bank employee, you can access the full amount the next business day. And if you deposit a check totaling more than $200, you can access $200 the next business day and the rest of the money the second business day. So, good to be aware that even if a payment lands in your account, either from a direct deposit or a check, it's not always going to be immediately accessible. Another thing to note is that the payments you make can be processed very quickly. So just being aware of not making a payment from your checking account unless the money is there to cover it and is kind of gone, it's past its hold period. And then knowing that your payments and withdrawals are not always processed chronologically in the order that you make them, just making sure you have enough in your account to cover everything. And then finally, a lot of folks automate bill payments, such as rent or utility bills. And it's a good idea, kind of going back to that cash flow management slide from the budgeting workshop. It's a pretty good idea just to keep track on a calendar of when those payments are going to be coming out of your account. Another thing to keep in mind when managing your account is to avoid overdraft fees. We already have gone over that. Fourth, opening and reviewing all the statements from your bank or credit union. It's always a pain to get those in the mail, and it's tempting to just throw them in the trash or shred them. But there are errors, and sometimes there's kind of a window of time in which you have to report those errors for them to get fixed. So it's a good idea just to make sure that the charges that show up on your account statement are correct, and that everything came in and went out based on what you were expecting. And also those statements will typically alert you if the bank or credit union is making any changes in minimum balance requirements or fees. Next, just spending only what you have and making sure to not write a check or authorizing electronic payment for funds unless you know you have the money to cover it. And then finally, just make sure to use your financial institution's ATMs. These are called in-network ATMs, and typically there's no charge for using that, but using an out-of-network ATM, so an ATM that's provided by anyone other than your financial institution, can result in a fee. And some banks will reimburse these fees. Our bank, one of our accounts, it kind of is a perk where if you meet the minimum like monthly requirements of direct deposit and debit card transactions, they'll reimburse you for your ATM out-of-network fees. Not all, that's kind of an extra perk that our bank offers, but that's not always the case. So it's kind of another question to ask when you're opening up an account. That pretty much wraps everything up. Lindsay will be distributing some additional resources that really do go into a deep dive of questions to ask, and also just some sheets on how to compare different account features, etc. But yeah, look forward to hopefully seeing everyone in person in the future.